Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Forgot my drinking receptacle. So cheers to you, retail trading team. This is Master coming to you live from nowhere else but Puppet Show Central with your routine briefing before this beautiful FOMC Wednesday. So we're going to go ahead and jump right into it. We got about 20 minutes before the fun begins, and we're going to see what we got going on today. So, by the way, I hope you enjoyed that intro song. There will be a video to that song eventually here, but I figured I have it in my library, so we might as well play it to announce the beginning of these briefings, and we will enhance the production quality as time goes on. So you can see the execution chart for today. I put this on Twitter as well. Obviously, levels are all subject to change. FOMC is the most chaotic of all the lovely events that we as 0DTE and other day traders have going on. So we will look at these levels for now, but really what I'm trying to accomplish with today's briefing is just kind of giving that big picture view and helping us kind of engage more at the edges as the announcement drops, of course, at 2, and then when the trend for the day at least is decided at good old Jay Powell's press conference at 2:30. So we're going to go ahead and jump right into the warm-up. Okay. So like I said, FOMC, chaos, everything is just kind of a general compass for today. I'm not really sure if that compass points north because, once again, the most chaotic event, anything can happen. 100-point swings in either direction would not be surprising, especially given volatility kind of holding on to some of its gains from yesterday. So yeah, so we're just got the VIX itself. It is below 18 again, so it's hanging out about unchanged on the day. Yeah, we really haven't given it up. So before last FOMC, which didn't end up being pretty bearish, you saw the VIX kind of start to give it up. So kind of again just lending to that assertion of randomness. So we're gonna again just see what we got going on, but really the goal here is to look at the key levels, not so much try to crystal ball. We should never really crystal ball, but of all days, this is one where that will not serve us well. So just look at this warm up, neutral balanced. The one interesting thing was we did have that open test drive bullish, which was quickly unwound. I didn't go back and check, but I'm pretty sure the last FOMC we had the same, which I believe was towards the end of March. So actually, let's just look that up right now. I think it was like 3. I'll look it up on Barb because I'll be able to tell by the large gain on that day. 3. Yep, here it is. 322. So it was an open auction that day. So never mind. I thought we had an open test drive that day as well, but we had it today. That's unwound again. Nothing really to glean from that. Just pointing that out. We'll see if the underlying bullishness is some sort of sign, but again, chaos. Word of the day, chaos. TPO, neutral. Nothing really to glean from there. Tight IBR. I don't find this too important. These first 3 metrics here, just because of the structure of FOMC, chaos. It's the last time I'll say that. I might put that in newsletter headline, which will come out right after this. But really, what I think the most important thing to look at here is these rule of 16 high and low. So SPX is currently at about 41.33. So watching where we go relative to the expected move again for these days, my favorite trade is just fading the edges if I get a signal, and those zones are going to be important. Again, not trying to crystal ball it, so just kind of looking at where we are relative to the expected move and seeing if we can engage at the edges there. And again, I just put the breakout levels here. So as the FOMC goes on, if we do get that really large range expansion, I will add to those levels. If you want to just keep tabs in this warm-up document, this is available in the description of this video. So we can go ahead and jump into the price action component, starting with our macro chart, which is, I think, the most important today, just given, again, the possibility of wide ranges. And you're seeing we had another swing low put in yesterday. That zone that we actually haven't looked at this chart since yesterday, we popped into that almost perfectly. So you can see we popped right into that demand zone. I'm going to just drop it by a couple cents there. So really the two levels that we're watching there, that 404 to 408 area on the SPY, and then again this 418 area above. So there is a strong potential for breakout, I think, if we do pop that high and start to build time and volume above it. Again, FOMC always looking to fade that first move, and really watching that press conference at 2:30 Eastern for the trend that the powers that be really want to take us. So watch that 418 level, watch for time and volume above, and if we do start to pop that, I'm looking at that gap right there, 421. If we want to see that extension above there, it should correspond to, I think, about 42.30ish on the ES, which is the top of an important channel there as well. So that is the macro levels. Again, 408, 404, 408 on the downside, 418 to, let's say, 421 on the upside. So as we move into our TPO, and we just kind of see that, a more granular view of that. First level, obviously, for the bulls is going to be cleaning up that single that we put in yesterday near the high of day at about 41.65, 41.77 is that high of day right about there. So I'm just going to pop this up just a little bit like that. And again, we're pretty range bound, but as we start to move higher, watching for that first fake break near that yesterday's high at 41.77, perhaps even a continuation up to 41.84.75 to clean up that naked POC. That's kind of my first fake break level. And then again, as we pop above that prior day high. Now, once we start to move, if and when we start to move above that 42.20, we do take out this supply zone, which is why I say the area that we're targeting next is probably that 42.30 to 42.40 area above. And then above that, if we really get a strong move, I think we're on breakout watch for a nice potential 50-point move all the way up to 42.70. So that's what I'm looking at on the upside. Downside here again, this demand zone I expect to be pretty strong. We'll be really watching, me personally, for that fake break again. But if we do start to push below that prior day, or not prior day, that last week's low at about 40.70, we may see some continuation there. Yet on the downside, there are a few more areas of potential support, starting at that 40.60 area, down to 40.40, and then this cluster here, I would expect to be a strong support if we do get that big sell. So those are kind of the big picture levels for our action today. And just kind of correlating that over to volatility itself, you can see as I mentioned at the beginning of the video, volatility is not really giving it up. So we are below this structure here, this triangle, yet we have not lost that 1920 area, which is that key area of support for volatility. And I think if we start to move above 20 again, we'll be back above that triangle. And I think you could possibly see that bit of bearish momentum all the way up to that 2120 area. Above 2120, we may really break out to the downside. You see you have kind of an inverse head and shoulder pattern developing here from last week to now. And so that could be the completion of that. So I'm watching again for levels of volatility, that 1920 area, that 20 area itself, and then 2120. And then on the downside, obviously, if we see that breakout, we may see volatility start making new lows. So big picture, it's a pretty simple look for today. Again, very much levels. Keeping in mind, again, I'm going to say them one more time. We're going to start with volatility here, 2120, 1970. So we'll say 1970 to 20. We'll make that a range. And then that 1760 level if we start to see that breakout. So those are the volatility levels. And then once more on the ES itself, I'm watching first that prior day high at 77. I'm going to ignore the single. I don't really think there's much anything tradable around that. So really that 77 to 85 area, watch it for that fake break there. And then again, above that 4,200 high. We start to hold, build time and volume above that 4,200 high. I think it's a fairly quick move up to this 4230 to 40 area. We're again looking for that fade. Yet if we push through it, especially with speed and aggression, that's where I think we break out and we have that big 50-point move. Downside again, this entire zone here to me is potential demand all the way from 4070 to say 4105 from yesterday. We start to break below that. We go to that 4060, 4040, and then down into this cluster here. So the downside breakdown targets I think are a little, I think the breakdown would be a little more choppy, whereas we really start to break out. There's not too much standing in the bull's way from pushing higher. So that's really all the levels I'm watching today. I'm going to go ahead and go back to the warm up. Again, I will keep all the levels in here as this FOMC, beautiful FOMC day progresses. Yet really level to level, watching volatility and just kind of taking the best setups only. Lots of chaos. It's not a day, I don't think, for too much pattern trading. You just have to watch that price action, watch that order flow, and again, take only the best setups. Some FOMCs I don't even take a trade just because, again, you're just dealing with chaos. This is some would say our business is always gambling. This is when it is at its most gambly. That is not a word, but for the purpose of today's routine briefing, we're going to make it a word. And that's all. I'm going to go ahead and just push this newsletter out. We have 10 minutes until the announcement itself, and then again 2:30, that's the press conference. That's when the moves really tend to start. So watch out for that newsletter. I'm going to put it out right now just to kind of package this up. And you can watch on Twitter at Routine Trader for any significant thing that develops. But really the most important document for you today is going to be that warm-up document. I'll keep the levels in there. We'll mine the levels. The only thing that you have to remember that I'm not going to put in there are those volatility levels. Just say them one more time. 21 or 2120, I believe. I'm going to double check that. Yep, 2120, 1920 to about 1950. That's a zone. We really want to see that breakout move. Really watch volatility there. So 2120, we'll say 1920 to 20 itself. And finally, a break below 1920 may lead to that breakout. So if you had to narrow it down to two, just because there's a lot going on, levels again, warm-up document, volatility levels 1920, 2120. Those are the two most important levels, and that's going to be the best areas to watch for any reaction today. So besides that, if you enjoyed today's content, I always appreciate that like. It helps YouTube's algorithm. And I will not be here, by the way, no briefings for the rest of the week. I have a lovely wedding to go take part in, and I will still post that execution chart in the morning just so you don't forget about me. But regardless, I look forward to seeing you Monday. Crazy week ahead, quite the week for a wedding, given Apple's earnings, the non-farm payrolls, plenty of fun catalysts at the end of the week, but such is life, and it's more important to celebrate the important things in life, such as marriage. So besides that, I'm going